Hello everybody, this is Paul Robinson at fxsimplified.com. If you want to go ahead right now and hit the pause button so you can read the risk disclosure, do so now. Alright, now that we've had a chance to get out of the way, let's move on to the charts. Alright, so each week I'm going to go over a trade that I put on, and it's either because it was a really beautiful setup or because it was a big winner. And in this case last week, there really were no big winners, at least not on my end. There were some small winners and there were some small losers, and it wasn't a particularly great trading week. However, dollar yen did offer an interesting setup from the standpoint that it gave you a good look on several time frames. And the first time frame that we're looking at here is the daily. So right here you'll see back in February we've got 2 points where price had come up and turned lower, and then we did it again over here in March. This level is 102.70, and then you've got this downtrend line coming off over these January peaks, crossing off through the March peak, eventually coming down over here and intersecting with this horizontal line. So right away this is already an interesting setup because you've got two different types of resistance coming together at the same point. Now if we dial in a little closer and we look at a 4-hour chart, you'll see that we have our daily lines in the light blue, intersecting nicely over here. And then on the 4-hour chart, now we've got a rising wedge over here. So we've got the resistance level, and now we've got a rising wedge, which it defines some levels for us to take action. And with this being the resistance level here and looking for a proper break on the rising wedge, I wanted to wait for a 4-hour close below this uptrend line, which is exactly what we got over here on April 22nd. This was the action bar. This is where I ended up getting in and putting on a short position at 102.55. I put my stop then above this swing high resistance at 102.75, and initially I'd put a target in at 101.75 above this support down here. And given the fact that the market's been so choppy lately, I wasn't really confident that we were going to get back down there, but it was a good place to start. And it offered a nice risk reward of 1 to 4. So you were risking $1 for every 4 that you were going to make, which is a trade that I'll take any day. But then it gets even more interesting. We've got this rising wedge. This is now an hourly chart we're dialed in on. We've got this rising wedge, as you can see, that was on the 4-hour chart and with the red lines. And then we've got the break that I was just showing you. Now we start to get a counter trend rally after the break, and what do we have? We get a head and shoulders. Got the left shoulder, we've got the head, we've got over here a right shoulder, possibility, right? And then if we come down here, we can connect these two and we can get a neckline. So we've got that. We've got this 102.70 as major resistance on the daily. Then on the 4-hour and on the 60, you can see the price contracting into a rising wedge, which is clearly broke over here. And then we go to a further degree lower. We can see that we have this head and shoulders. Right? So we've got 102.70, rising wedge, head and shoulders. At this point, this would be in a good trading environment. This would be a very exciting setup. And while I was certainly confident that it was going to work, in a really good trading environment, I would have anticipated a sharp move lower out of this. However, it's not the greatest environment at this moment, and daily ranges have contracted considerably since January. So, we kind of take what we can get. Nevertheless, we did break lower. We gotta move down off this head and shoulders. And the measured move, if you would look at this head and shoulders pattern, right? So you're looking around 102.30 to 102.35 as being the low portion of this pattern up to the head of this pattern, which is 102.72. So we're just going to call it roughly, 35 to 40 pips from wherever we break on the neckline. And over here we broke right here around 102.50. So I would take and subtract 35 to 40 pips off of this, which gives you a target of around 102.10 to 102.15. Now on this move lower here, we just barely missed it. We ended up getting a retracement back up to the neckline before then turning back lower again, and we got one more test over here at 102.60. It was at this point that I really had started to I still thought that we were gonna end up getting down towards the 102 102.10 area and be able to take some profits. However, it becomes quite evident that that it's going to do so in a 3 down 2 up fashion. Right, that's already what we're getting here. So my expectations had diminished significantly, and as we headed over here, again we got barely a new low. Started retracing back up, and I had decided that the next time we were going to make a new low here, which was also going into Friday, that I was just going to go ahead and take the trade off. And so this is a trade where initially it looked like you had over here at this point, just looking at this, looked like you were going to get a nice clean setup, and we're gonna get a nice clean drop. But given that market conditions are choppy, that wasn't the case. So you have to kind of identify that. What kind of market are we in? Are we in a choppy sideways market, or are we in a momentum market? And so being that we're not in a momentum market, it's a good thing to take profits when offered them. And there'll be momentum markets. They'll come back. It won't be like this. Doesn't stay like this forever. So with that said, Friday took some profits. Decided to just call it a week. We've got some setups which I went over in my newsletter this week. Where I think we're gonna probably have some good moves to take advantage of, starting either this week or at least into the first week of May. So with that said, that was it for this trade. So I appreciate your time and for joining me today. And if you want to find out more, if you want to sign up for the newsletter, and you can also follow me along on my my trading activity on my Twitter handle. If you want to find all that out, you can just go to FX Simplified, if I can spell it right, .com. And once again, thank you and have a good day. Bye.